Well, howdy there, folks. Walmart, Target, Elon Musk, oil prices, gas prices, all calling for recession 2024. I want to go through exactly what's going on here, my perspectives on this. Are these realistic fears around recession for 2024? Or are these calling out? I want to go through kind of what these companies are saying, what these individuals are saying, and then we'll kind of talk deeper after that. So we're also going to get into, by the way, some stocks in this video, and we are going to talk about a stock that I think is a possibility for me buying in 2024 that I have not previously spoke about. There's a new stock on my radar that I think I might like for 2024. So a lot to go through in today's video. I appreciate everybody joining me. Let me just jump straight into this, okay? First off here, deflation could be coming this holiday season, says the Walmart CEO. This is a massive, massive statement. When we're talking about deflation, that's a whole different ballgame, right? Everybody's so caught up into inflation, and obviously the problem that was in 2022 really has started in 2021, but certainly 2022, and then, definitely part of this year. Now all of a sudden we're talking about deflation. When the Walmart CEO says something like this, I think it's worth paying attention to, right? Shoppers may get an early holiday season gift, falling prices in gift-giving categories. On Thursday, Walmart CEO Doug McMillon said deflation could be coming as general merchandise and key grocery items such as eggs, chicken, and seafood get cheaper. He said the retailer expects some of the stickier higher prices, such as the ones for pantry staples, to start to deflate in the coming weeks and months. Now, this is, I would call it huge when you start talking about deflation. And the reason being is you don't usually see deflation. You can see the rate of increase of inflation go down over time, but generally you don't see actual deflation. It is extraordinarily rare. The only time I could really find deflation in the past many decades was right here in 2009 during the great financial crisis. We actually saw deflation during that time period, but it is very rare. You almost always prices are going to be more expensive. It's the world, okay? If you know the world, and you've lived in the world, this, okay? Prices don't usually ever come down for the most part. They just go higher over time or they stay stable. And so to see deflation is extraordinarily rare, okay? Next up here, gas price, and then we'll go through each of these scenarios. I just want to give you the facts, lay it all out here, and then we'll go through each of these scenarios and break them all down. Walmart, oil prices, Target, Elon Musk, okay? Next up here, gas prices. What's going on with gas prices? Well, they are going down now at this point in time. This is AAA, keeps track of gas prices around the United States of America. Regular gas is averaging about $3.33 a gallon right now. A year ago, we were at $3.72, and diesel has dropped over $1 a gallon, which is pretty substantial. And you even think about what's going on in the Middle East, in the conflicts in the Middle East now, you would think, if anything, gas prices would be up year over year, but they're actually down. So this is a very interesting dynamic. And keep in mind, gas prices could continue to come down for the next several months. And the reason being, WTI just in the past month has dropped about 11 percentage points. It's having a bounce day today, but these things bounce around a little bit. But the trend is clearly down for oil, despite what's going on in the Middle East, which is kind of okay, what's going on here, right? Now, keep in mind, when it comes to gas stations, they usually lower their price, let's call it a lot slower than when they raise their price. So you're likely going to see over the next several weeks gas prices continue to come down, and you could see this actually for the next several months. When oil price goes up, gas stations are quick to, I came from the gas station industry. I worked as a manager at Quick Trip, right? When oil price went up, everybody was really fast to raise price, but when it went to the downside, everybody's slow to react, and then it gets more competitive with your other competitors you have in the area and whatnot. Okay, now. Next up here, Target. So Target has had 2 straight quarters of negative revenue. This is rare to ever see Target's revenues going down, and seeing their revenues go down back-to-back quarters, and likely, high probability, their revenue is going to be down in the fourth quarter as well, which would mark 3 straight quarters of negative revenue. And there's a potential, and that's a real question mark, if Q1 of 2024 will be negative revenue as well, which would mean 4 straight quarters of negative revenue for Target. Now, I look back and throughout history and try to find how many times, any time in recent history at least, past 15, 20 years, how many times was Target's revenue actually going down? And I looked all the way back to, now keep in mind their fiscal years end at the beginning of like a new year. So really this is like 2005 calendar year, 2009 calendar year. This was obviously 2022 calendar year. It just ends in their fiscal year, ends in January 28th, right? But I looked back in time and I found in 2013, we can call it very slightly their revenues were down, somewhat flattish. Only a time period in any time in recent memory was 2016. The revenues were down about 5.8%. So it is extremely rare to see Target's revenue ever going down. And check this out. In 2009, for instance, the revenue was actually up slightly, which is very telling, right? So I would say it definitely feels a little more recessionary from Target's numbers this year, right? Now, Elon Musk, what happened here? Well, we all know last month, right, the Tesla conference call happened. And a lot of people left that conference call extremely frustrated, a lot of Tesla shareholders. And the reason being is, Elon Musk talked about macroeconomics and interest rates and macroeconomics and interest rates again and 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 again, okay? These are all just screenshots I have of Elon Musk just diving into macroeconomic related things, interest rate things, right? He even started bringing up 2008, and he even brought up, how they closed a financing round 2008 at 6 p.m. on December 24th to keep the company alive, right? And the company barely made it through 2009. And so, Elon Musk is definitely in a state of, very worried about the consumer, very worried about interest rates, very worried about the economy, and all these sorts of things, right? Okay, so that's kind of what we got going on there. Walmart, Target, Elon Musk, gas prices. Now, let me go ahead and tear down the walls, okay? I will tear down the walls in this situation. By the way, are these not some of the most epic photos in the history of mankind? Like, seriously, you think about some of the most epic photos in the history of mankind, like some of these photos got to be like up there. Definitely some of the most epic photos ever, okay? So, let's attack it backwards here. Let's start with Elon Musk, okay? So, as far as Elon Musk goes, he's been bearish for like 2 years, okay? This is almost 2 years ago now. Somebody asked him on Twitter, back when it was actually called Twitter, before it was X. They said, when do you think the next recession will be? This was almost 2 years ago now. He said, predicting macroeconomics is challenging. Well said, Elon Musk. Well freaking said. To say the least, my gut is maybe around spring or summer of 2022, but no later than 2023. Now, technically, we really had a recession in 2022. The government didn't call it that, but we did technically have 2 straight quarters of negative GDP. So do keep that in mind, right? But no later than 2023. So keep in mind, Elon Musk is not new to kind of the bearish camp. He's been there for pretty much 2 years at this point in time, okay? Next up here, Elon Musk is in scarcity mentality. He's really been in scarcity mentality for the last couple of years. You may think, is it possible for a billionaire to be in scarcity mentality? Absolutely. It's possible for anybody to go over to that side of scarcity mentality. Now, believe me, what got Elon Musk to $100 billion plus net worth is not scarcity mentality. That man's been playing in abundance mentality almost his entire life, really until like the last 2 years, right? I mean, to think you could make an automaker work, an electric vehicle automaker work, to think that you could pull off some of the things he's pulling off, like, you have to be so far in abundance mentality, it's like a whole different level of like belief in yourself and belief in what you can build in your teams and those sorts of things, okay? But let's be clear, man's over here right now, right? Now, why is he over there? I think there's a few different reasons why he's over there. I think one is the Twitter thing. I think it's really put him in a very scarcity mentality type outlook, right? Because imagine you buy out Twitter, you overpay for the company, which he did, right? And you are suddenly stuck with this company that is bleeding revenue, bleeding cash, negative cash flows. It's a freaking mess. And after what he's built with Tesla over time, and building that from a company that in 2009 was fighting for survival, that needed as he said there, December 24th, Christmas Eve, he gets a Santa Claus Christmas present to keep Tesla alive, right? And build that from a company that was barely staying alive to going through Model 3 hell, and then building that into a great cash flow, profitable company, and building that into one of the greatest companies. Then you acquire Twitter. And what happens? It's a freaking disaster. And you've got to try to, save this ship where it's just a horrible situation. I mean, damn, that's enough to put anybody in scarcity mentality. You acquire a social media company like that, right? And it's just bleeding. It's just bleeding money all over the place. And even after cutting employees, it's still not in the best position, right? So that is enough to put anybody in scarcity mentality. If that wasn't enough, let's call it what it is. Tesla stock has been in a not the best place for 2 years now. If we go back about 2 years ago, right around today actually, there was a $400 stock, right? $400 stock. And now it's a $234 stock, right? And it's kind of been in this, we can call it, $150 to $250 range for quite some time now at this point in time, which is a long damn way from $400 a share. So, that's his main net worth is made up of Tesla shares. And it just seems like, Tesla stock is obviously having trouble and continues to have trouble. Now let's talk about competitors, right? You want to see your competitors do okay over time. You want to beat your competitors, but you want to see them at least do okay. Let's think about all the EV companies that were supposed to be the next Teslas and supposed to be these successful companies. All these companies have either gone bankrupt or are getting very close to facing bankruptcy. All of them, pretty much. I mean, there's basically no one in the EV space outside of Tesla that is seen as like super healthy. Almost all these guys, right? All the stocks that were talked about like crazy in 2021 and the EV excitement wave, right? They're all doing horrible. I mean, absolutely horrible. Their business models are complete trash, and they're at real risk of going bankrupt in the next 1 to 2 years, right? And so that could put somebody in scarcity mentality as well. See all your competitors just, either going under or getting pretty damn close to going under. Yeah, that's not the prettiest situation, right? Now, also, we do have to say this, right? This is Tesla and Elon Musk's first time taking the company through a real recession as a true revenue company, right? Because back in the great financial crisis, Tesla was basically a pre-revenue company. Let's call it what it is. It was basically what's that. The revenues were so meaningless that there was basically a pre-revenue company. So there's definitely a possibility Elon Musk and the team have made some, maybe let's call it not the best decisions around margins, where maybe they cut price too much, right? Because you reach a certain amount when it comes to running any sort of business, where if you just keep cutting price, you're more hurting yourself than helping yourself, right? There's a certain price point where if you cut prices, it's an intelligent decision and you pick up volume. But then there's a certain point where even if you cut price, you're not really even picking up volume anymore. You're just more hurting your margins overall, right? And there is an argument to be made that maybe Tesla's cut too much, right? Maybe the first few cuts made sense on some of the vehicles, but maybe they've gone too far now at this point in time and they've actually led themselves to even a bigger scarcity mentality. So that's the Elon Musk part. Now, what about Target in their whole situation with 2 straight quarters of negative revenues? Looks like they're going to get a 3rd straight quarter of negative revenue and potentially a 4th quarter. Well, Target is really two stories. One is a self-inflicted problem, and the other is something else. Okay, the first thing is they were involved in some very negative controversy. This was probably 6 to 9 months ago at this point in time, and that at least hurt their business model maybe a couple percentage points. They got a bunch of bad publicity 6 to 9 months ago all over social media and all over TikTok and all those sorts of platforms and some. And that at least negatively affected them a little bit, right? But on top of that, inflation has obviously weighed on the consumer very heavy. And if you are talking about inflation weighed on the consumer super heavy this year, people are going to go to Walmart. Like, people are going to go to Walmart. That's what's bottom line. Like, Walmart's usually going to beat you on price. And also, you're going to sell to your current customers. They might buy one less pillow and one less blanket and one less this and that at your store because they're being hit by inflation, right? And money's just a little tighter in that sort of environment. So that's something, obviously, that has caused Target to be in a tougher position. Now, if real wages continue to pick up, Target's business model, and the controversy, obviously, they don't have any new controversies in 2024, then Target could actually be looking very, very good for 2024 overall, okay? Now, in terms of crude oil, let's call it what it is. Crude oil is actually still very elevated. It is. On a 5-year, this baby's up 49%. If crude oil goes under 50, then we're talking, okay? Then we're talking about, ooh, man, maybe we do have the big recession or something like that. But crude oil 75, if we look at the last 5 years, it's actually pretty in line with kind of what you would expect. So we're not necessarily getting the telltale signs from crude oil yet about recession's guaranteed. Like I said, if crude's $60, $50, I think that's a different situation. That could mean likely, recession. But right now, I think that's, I think that's a pretty normal, healthy level. Oil over 100, I don't like to see that. I think that hurts the economy massively. Oil under 50, I think that means you're either going into a massive recession or you're already in a massive recession, because usually you don't see oil under $50 a barrel. I think we're pretty normal as far as that goes, okay? Next up, Walmart. So Walmart, when they talk about deflation, remember, they're talking about a lot of grocery items, eggs, chicken, seafood, things like that. These are things that are like have to buys, right? Like people like are going to buy these sorts of things week in and week out at Walmart anyways. Seafood, chicken, eggs, grocery items. At the end of the day, if anything, this is extremely bullish overall. This is a type of stuff you need to see cheaper, right? This is basically just like tax on the consumer. No different than gas prices are a tax on the consumer. Going to buy eggs and chicken and grocery items is a tax on the consumer, right? And it's either more taxed or less taxed, depending upon if it's inflationary or deflationary at a particular time. So I look at something like this and I say, okay, this is actually bullish and this could actually help the consumer in a great way in 2024, which is the exact opposite of what it's been for the last 2 to 3 years, which has just been destroying the consumer. And every single time you go to the grocery store, it's like, damn, I got to pay more. I got to pay more. That same thing I bought last week or last month is now even more money. And now, if anything, it's like, oh, it's more affordable. It's more affordable, right? That's a phenomenal thing. That leaves you more money to spend on other things, right? Such as my Black Friday deal for $62. Now, real wages have just started to improve. And this matters meaningfully, right? If we think about real wages in, it really started in 2021, but especially 2022, and even a lot of this year, real wages were in a bad spot, but we've just started to uptick this here recently, and I think we could see major improvements in real wages in 2024. Inflation is not going to be an issue. If anything, I think the subject could be around deflation, and in that sort of environment, real wages should look very, very good because a lot of companies have still had to basically play catch up and raise wages overall for employees. And in a sense, employment market is still pretty tight. That creates a dynamic where the employee has some real leverage here in this situation, right? Obviously, you guys see what's going on with the unions and all those sorts of things. So I think real wages could boom in 2024. I think it's a realistic possibility, right? Now, if you know my 4 scenarios personally, I have these 2 being the most realistic scenarios. One is earnings go down, recession hits, job losses, revenues go down, and the Fed starts cutting rates aggressively in the second half of 2024, and then about 35% odds. As of right now, as I have a look out there, I'm a little more bullish than bearish. I have these at about 45% odds, where the economy stays good, unemployment stays under 4%, and we get CPI that's, very welcoming the whole year, 2s, maybe even below 2s. We'll see. Real wages boom, housing and autos bottom in the first quarter, and then, we have kind of a booming market overall. I think that's a little higher probability at this point in time, although all 4 of these scenarios are realistic. I think this is actually, if I had to put odds on it, this is the highest probability right now. And so I think that bodes well for us overall. So we'll see how all this plays out, folks. But that's kind of my stance in regards to that. No, I was looking at the market here today and I saw some fascinating things, and then we'll get into a stock that I think is going to an actually really interesting opportunity in 2024. But, I looked out there today and I saw, my gosh, all my best stocks here today are really the type of stocks that are kind of more risk-on related plays, right? I looked out there, I saw Avant, Revolve, Shopify, Palantir. Look at Palantir, well over 20. Shout out to the Palantir shareholders. Hope you guys are doing well. I know I'm certainly doing well in my Palantir shares. It's a fun ride, man. I hope it's going to be a whole lot more fun of a ride. Nordstrom, 4% plus up today. Honest was up about 5 percentage points. Foot Locker's up over 6%. Fubo's now just crossed 316. That one's up about 9% here today. And you look at these stocks and they just continue to move and move and move. And it's really been a gradual process in terms of these stocks bottoming. But I noticed a lot of these stocks have bottomed in the last 1 to 2 quarters and are really picking up steam at this point in time. Fubo back in the springtime was $1.04 a share, $1.10, something like that, right? That one's obviously picked up steam. And so there's definitely starting to be some money coming into these stocks. They're not getting talked about that much. It's still kind of like, and we're still kind of an early stage in money coming into some of these more riskier plays, I guess you can say, the more risk-on type stocks. But it's very clear that money is coming there, right? And so there is a rotation starting to happen beneath the surface that's just not completely visible. If I look at my worst stocks here today, right? Mattel, PayPal, Elf, Target, Meta, Pfizer, and Texas Roadhouse. These are more safety-related plays, right? Texas Roadhouse has the best balance sheet of any restaurant chain in the world. Freaking, like, as good as it gets, right? Obviously, PFE's always got their business going. Meta's always got their business going, right? Target is, although their numbers have been rough here recently, the valuations come down so much, and actually it's an easy money buy, by the way. That one still is seen as more of a safety play. Elf's probably the one that's not seen as a safety play because it's a higher valuation, but their business model actually and their products are actually seen as a safety play because they're so affordable, right? And it's needs-based. It's beauty and makeup and cosmetics and those sorts of things, right? PayPal, I think, like I told you guys, I'm not bullish on PayPal through the end of the year. I'm still worried about tax loss harvesting, kind of weighing on the stock over time. I'm super bullish on 2024 for PayPal, though, like insanely bullish on PayPal 2024, but not necessarily bullish in the short term here, as I've said a million times. And then Mattel is definitely more of a safety play, good profitable business model, and stable. And so, it's very clear kind of what's starting to transpire at this point in time. There's a rotation happening, right? And some of these smalls are getting positioned, and I think there's a lot of early people are positioning into some of these small caps, getting ready for them to go on a pretty big run, right? And there's two ways these stocks could go on a big run. A lot of these riskier plays, if we want to call them that, right? There's two ways. One is everything's pretty good next year, economy strengthens, and that's going to bode well for a lot of these companies, right? The other is a Fed cuts rates, because the biggest worry in regards to these stocks was the Fed keep raising rates and raising rates. And people looked at that as just a huge risk for especially a lot of these small caps or debt-ridden companies and things like that. So whichever way you slice it, a lot of these dividend stocks and a lot of these small caps are looking good. I mean, really freaking good for this next year. Because whatever scenario, good scenario or the bad scenario, both are actually ideal for these sorts of companies. Cut rates down. Fed, okay, recession's here, unemployment's going up. Okay, Fed's got to cut. Okay, now all these companies that were taking L's and are actually gotten their business models to much healthier levels, there's not to worry about bankruptcy then, because there's easy, cheap money out there, right? And on the flip side, economy strengthens and the consumer gets in a better place. That's going to help all those companies out as well, especially with inflation no longer being an issue. And you can see their margins improve dramatically in 2024. So I'm looking out there and I can see why some Wall Street money is starting to come in these stocks and starting to position into them over the last, couple quarters here. It's very clear what's going on. They got a perfect situation for 2024. And don't be surprised if more money funnels into a lot of these sorts of stocks over this next 6 to 12 months. Do not be surprised at all. Okay. Alrighty, next up here, let's talk about a stock that I think I might end up buying in 2024. I could buy the stock I could buy it in the next few months here. I think there's a pretty high probability. I really like what I see with this company, and I'll just tell you a little bit about it, okay? So it's Bath and Body Works, and this is a stock that, has really been hammered. It could continue to see tax loss harvesting into year end. It's, a stock that's been very troubled, and so don't be surprised if you see tax loss harvesting in the year end. If the market was to get rough at all in December for whatever reason, let's say Santa did not come to town, and maybe Santa already came in November and just no one realized it and December's rough, don't be surprised if Bath & Body Works, sees a $26 or a $25 stock price in that sort of situation. But I look at this one and I see a business model that is ultimately very well positioned, in my opinion, for 2024, with the consumer being in a lot better place in 2024, inflation not being an issue, real wages picking up. I think Bath & Body Works is going to be very well positioned. I don't think big ticket purchases are going to be taking any people's money in 2024. I don't see people going out there and buying cars like crazy, homes like crazy, which those take huge down payments. I don't see them going out there and spending money still on furniture in 2024 for the most part, unless it's in the back half of the year. And so I think where people are going to be spending money, where excess money and things like that, I think is going to be on smaller ticket purchases, which is things like soaps and candles and restaurants and, the lower dollar amounts. And so I think Bath & Body Works is very well positioned. And I love this business model overall, obviously for the long term. I mean, they got a pretty awesome business model with very few serious competitive threats. They really don't have any serious competitive threats, right? For their business model overall, I don't know if you guys have ever been to Bath & Body Works before, but that's what it looks like. They also own another brand called White Barn, which could have been seen as maybe the only competitive threat to Bath & Body Works, right? These two stores have a very different kind of vibe. They sell very similar products, soaps and candles and lotions and these sorts of things, but they have very different vibes. And I love kind of seeing these stores laid out next to each other because you can just see how different the vibes are of it, right? Whereas White Barn has a little darker kind of vibe to it and whatnot, where Bath & Body Works super bright. And so I like the way these babies set up. I really do. I really, really like the way these set up. And I look at the valuation here, And the valuation is extremely compelling on Bath & Body Works. The stock is trading under a 10 forward PE. Under a 10, folks. Now, the only bad thing in regards to Bath & Body Works is the balance sheet. I don't like the balance sheet for the company. But outside of the balance sheet, I like everything with this business. And I like where they're going for 2024 and beyond. So, if I do buy it, I'll likely be a smaller position for me, a little more speculative. And the reason being is not because it's a spec company, but just for the balance sheet reasons. Where the balance sheets, I don't like the balance sheet. And so I'd probably keep it as a 1 to 3% type position sizing as far as what I would put into it. But don't be surprised if you see me buy that one in the next few months, folks. I appreciate you joining me as always, folks. We are now only 6 days away from the Black Friday special. If you haven't signed up for that, to get ready for that, check out the pinned comment down there. Access to my Become Master Stock Market course, my #1 stock market course ever. Full access to that. Ability to see the stocks I'm buying and selling each week in the Patreon portfolio and see exactly how I diversify the funds around. It is freaking amazing. That's the value of the century. That is the best Black Friday deal you'll get. Probably even better than some soaps and candles at Bath & Body Works. I appreciate y'all as always. Thanks so much for joining me, folks. Much love and have a great day.